course, the biggest mover within the tech space today is Zoom. We have to mention this stock. It's up about 40%. Last night, we broke the earnings for you. Zoom reporting just an incredible quarter of growth, incredible quarter of profits, the number of customers that have signed up, number of customers they've retained, their earnings or their revenue, in the most recent quarter, almost was their entire revenue for all of 2019. So just an amazing turn for that business as we've, would expect in this time when Zooming is basically the only way that we're communicating with other people. But still, just to see the stock up 40% today, this stock's IPO was priced. Now it traded above that, but it was priced at $25 a share. And right now it's trading at $454 per share. So certainly been an amazing 18 months for Zoom. Obviously, they did not foresee a pandemic would happen, but certainly that stock is at the center of what's happened in this market. But for a little bit more on today's market, I want to quickly bring in my co-host, Seana Smith, joining us for the next couple of hours. And Seana, just what stands out to you in today's action?
Yeah, Miles, you can't ignore the movement that we're seeing in Zoom, because I know we covered those earnings and you were just talking about the fact that we're seeing nearly 40% jump today. Remember that this is a stock that was trading around $70 to start the year. And it really just, I think, illustrates everything that's been happening in the markets over the last couple of months. Investors are still finding reason to buy the names and bet on the names that have been outperforming, that have been really carrying this market over the last 6 or 7 months. And we're seeing that in these names today. Take a look at Zoom, for example, like I said, up 40%. Peloton hitting an all-time high today. Apple, like you said, up another 3+% today on the heels of yesterday's 3% rally. So investors piling into these momentum names, these names that have been benefiting from the work from home trade, and then also just the big tech names that continue to lead the way. And I think this also just points to the bigger picture here, and Wall Street just having a tough time reading this market movement and also just making sense of it and going through some of the commentary that's been out there this week. I mean, you have big market watchers here just pulling their year-end targets because there's simply no precedent on how high valuations can go. And we heard that from Tony Dwyer at Canaccord yesterday in a note. And then we also heard from Brian Belsky today, and he was just talking about the fact that this rally out here is really challenging those traditional forecast models that are based on earnings and interest rates. And there's really no precedent to what we're seeing take place in the market today. And there's still a clear disconnect between what's happening in the market and then also what we're seeing in the economy. But on that economic front, we did get a little bit of good news today. I mean, we don't want to make too much of just one data point, but the manufacturing data that we got out this morning, Miles, is definitely a step in the right direction. That final reading on manufacturing PMI hitting a 19-month high, new orders hitting the highest level since 2004. So even though the economy is still significantly lagging here, we can't put it on par with what we're seeing on the market side of things. We are seeing some of the readings improve just a little bit.
And guys, just to jump in here on Zoom, since Miles mentioned, I think that's where a lot of the eyes are. Of course, Apple and Tesla, but Zoom especially today. I mean, that revenue up 355%, it's so mind-blowing, but at the same time, it's not very surprising. The interesting question to me, and Melody Hom and I were discussing this and debating this a little bit on an earlier live show today, but the interesting question is that with Zoom, like with many of the other companies that have flown high during the pandemic, the retort that a lot of people give in order to cast a little bit of doubt is they say, oh no, is it only a pandemic thing? Is it short-lived? Can Zoom now continue this momentum? Is it raising the bar too high? Because a year from now, are the numbers going to be as big? And I think that question, when it comes to some of the brick and mortar retail names that we've discussed in the last 2 weeks that reported huge Q2s because of online sales, I think the question is a little more fair and legitimate and interesting when it comes to Zoom. Because I think with the e-commerce boom that is here to stay, and that was happening before the pandemic, for Zoom, if and when we return to normal and the entire country isn't sitting at home, working from home, doing school from home on Zoom, will that momentum really keep up with the very high expectations that the company has now just set?
Well, and I think a read through maybe is that the strength of Zoom perhaps speaks to the unfortunate persistence of the pandemic and how much longer the market at least expects that we will be at home and kind of using Zoom as a tool to communicate.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.